recent stock market pullback reminds us that the global debt problem is not going away, and that sustained organic growth will remain spotty. While these issues and the upcoming election will dominate headlines, I think it's wise to position one's portfolio for income and growth with a position in gold. In other words, I still wouldn't bet the farm for a high double-digit rate of return for 2012. Getting single-digit returns ought to be more realistic. As the world struggles with lower growth, I believe other factors, some God-made and others man-induced, could hinder growth. For the continental United States, this winter was especially mild. Already temperatures are at or near record highs. As spring quickly is giving way to summer, we should expect some dire consequences, namely, that the U.S. grain output this year could face a drought. In 2010, this happened in Russia. It experienced a hot spring and boiling summer. Its grain harvest, i.e. wheat, maize, barley, oats, sorghum, rice, and rye, went from the usual 100 million tons to 60 million tons as crops withered. Considering Russia was the third largest grain producer, this decline resulted in a worldwide 60% increase in grain prices. If the U.S. experiences a boiling summer and there is a 40% loss of its annual 400 million ton grain harvest, this would translate to a deficiency of 160 million tons of grain. These losses would be more than the 128 million tons of grain that goes toward ethanol production. Such a situation would wreak havoc on food and ethanol prices throughout the world. Certainly, other grain producers might have better harvest and be able to produce more, but is it realistic that they would be able to bridge the losses of one of the biggest grain producers in the world? Besides escalating food cost, there's another thing that could exacerbate matters, and that is the decline of freshwater resources. Irrigation-based harvests are shrinking. Back during the oil embargo of the 1970s, Saudi Arabia foresaw that it could face a food embargo because it had no wheat production. Due to its oil technology, it was able to tap into a fossil aquifer deep under its oil reserves and begin irrigating the desert, becoming self-sufficient for the first time. In 2008, it announced that its aquifer had been depleted and it would phase out of wheat production. Almost instantly, the country went from being self-sufficient, having produced 3 million tons annually, to producing almost nothing. At least 17 other countries are overpumping their water reserves and could face shortages this year. Even now, some families in the third world only can rely upon one meal a day. What happens to them when the fragile world food system becomes disrupted? What will happen in this country when food prices jump dramatically? I'm not trying to sound like an alarmist, but soaring temperatures, food prices, and less water could trigger a war in Asia. At least that's what the CIA predicts could happen by 2015. Already in Pakistan, communities have become angry over water rationing and blame their neighbors in India for having erected dams. How tolerant will Pakistanis be accepting higher food prices and further water rationing? Even in the U.S., water levels are not high. Drive over a bridge and notice the lower levels. Look what happened in Atlanta's Lake Lanier in 2008. Water is a resource that we have taken for granted. If the weather worsens this summer in America and our crops are severely hurt, some stocks could suffer. Others might weather the storm better. A resources war, though, could harm many investors. Just like global debt levels, the coming heat of summer and stressed water systems are not going away. Conservation should be another term for living within one's means. One cannot guard against every contingency. Nothing is foolproof. Through diversification, value investing, and avoidance of certain securities, risk can be mitigated. Avoiding the manias and investing with prudence makes sense, especially now. To see how your portfolio is positioned, give us a call at Armada Advisors, where we are charting a better course.